Are we on the brink of an economic crisis? Today, we'll decipher how potential dollar liquidity flooding might steer the markets. Welcome to Financial Insights in Minutes, where we summarize the day's top financial videos to save you time. In this episode, we'll examine trends in Bitcoin, tech stocks, and the looming sovereign debt crisis.
With insights from notable experts, we'll uncover what this means for your investments and future strategies.
Stick around for an insightful outro where we summarize the key takeaways from today's discussions.
Now let's jump into the video summaries.
First, Jack Mallers warns of looming dollar liquidity flooding that could inflate an asset bubble and impact investments. Next, we explore volatility in the tech sector with Game of Trades, where a downturn could be on the horizon. Rick Rule dives into the fear of a significant black swan event affecting high-yield debt and the implications for investors. Lance Roberts discusses the optimism returning to stock prices as the market breaks resistance points. Joseph Wang evaluates the noteworthy market surge tied to recent data and government housing proposals. CiovaccoCapital highlights the demographic and technological shifts that might propel stocks to new highs in 2024. Finally, Blockworks Macro rounds up investor sentiment amidst the fluctuations surrounding recession fears. Welcome to Kitco News. Today, we're diving deep into Jack Mallers' insights about potential dollar liquidity flooding and looming sovereign debt crises. Jack, an expert in Bitcoin and the founder of Strike, is here to break it all down for us.
That's right. With his extensive background in Bitcoin payment systems and development, Jack has a keen perspective on the volatility in financial markets. Let's navigate the currents of today's discussion.
So what's the key takeaway from Jack Mallers' discussion?
The central thesis suggests that Janet Yellen may soon facilitate a major influx of dollar liquidity to stave off the U.S. debt crisis and maintain economic stability, ultimately risking a significant asset bubble.
Let's get to those key points. What does Jack say about the economic indicators?
He points out that despite rising interest rates, gold and Bitcoin are performing well, with the S&P 500 up by 2,000 points, reflecting inflationary pressures within assets.
And how about Janet Yellen's role?
Jack highlights that Yellen holds more clout than Jerome Powell, and her liquidity actions are crucial for preventing a potential U.S. debt crisis.
What are the risks surrounding the sovereign debt crisis?
The U.S. is flirting with a serious debt problem, with issue rates rising and liquidity drying up, posing risks to the dollar's status as the world's reserve currency.
So what does Jack predict about future asset prices?
He predicts that massive dollar liquidity injections will create a sizable asset bubble, with Bitcoin potentially exceeding $100,000 this year.
What about the long-term outlook for Bitcoin?
Jack considers that Bitcoin could range between $250,000 and $1 million in the next 12 to 18 months due to ongoing dollar debasement.
As we wrap up, what's the major takeaway?
The key message is the need for robust economic policies to manage the challenges posed by rising liquidity and a growing debt crisis. Viewers, what are your thoughts on how this could affect your investments? Share in the comments below.
In light of Jack's insights, is Bitcoin a viable option for diversifying your portfolio?
Absolutely. It's worth considering Bitcoin as a hedge against inflation and potential economic instability.
Welcome to Game of Trades, where we navigate the currents of the financial markets. Today, we're diving into the recent volatility in the U.S. tech sector. Did you know that a staggering $10 billion was wiped off the market in just 1 month?
That's right. Tech stocks had a tumultuous month. From shocking losses to rapid recoveries, we'll break it all down and see if this is a storm or just a little squall. Let's get straight to the facts.
So what's the main thesis of today's discussion?
Essentially, the tech sector's wild fluctuations may be signaling a significant turning point. With possible recession indicators, the question looms, is this a blip or the start of a larger downturn?
Let's break down those key points about market recovery. What's new on that front?
It's dramatic. The tech sector plummeted from $65 billion down to $55 billion before bouncing back. Last year, it lost a whopping 30%, yet in 2023, it saw returns of 80%. Quite a ride.
And what about the potential downturn?
Here's the scoop. Tech stocks saw an 18% drop recently, causing a shift, With tech trading at a 30 PE ratio compared to the S&P's 18, warnings are sounding. Sounds risky.
That makes historical context crucial. What's the history of tech performance?
Tech stocks tend to falter during recessions. The only exception was in 2020, when tech thrived due to pandemic dynamics. For every other recession, it's been a tough see for tech.
Any predictions rooted in these analyses?
Predictions lean towards a downturn in tech stocks if a recession hits. Investors flock to safer bets, which means utilities and consumer staples may shine while tech gets left behind.
What about monitoring trends? What do we see?
Right now, about 75% of stocks are showing upward trends. That bodes well. If this keeps up, tech investors may have a chance to reconsider their positions positively.
In conclusion, what's the final takeaway for our viewers?
The future of tech depends heavily on upcoming economic indicators. So as we keep a close watch, what are your thoughts? Should tech investors brace for impact? Drop your comments below.
Welcome to David Lin's channel on YouTube. Today's captivating subject: what looming black swan event is sending shivers down Rick Rule's spine? Joining us is the astute Rick Rule, co-founder of Rule Investment Media and a titan in the resource investing arena. Buckle up for some profound insights.
Absolutely. Rick's perspective is invaluable as he deep dives into the current economic landscape and the shadow of potential crises. Prepare for an enlightening discussion, folks.
So what's the driving concern Rick brings to the table?
Rick highlights that while there appears to be confidence and liquidity in the market, the looming threat of a black swan event related to high-yield debt and a possible recession creates a volatile environment. It's a precarious balancing act.
Let's unpack some key points from Rick's insights, starting with economic conditions. What's the latest scoop?
Rick notes that U.S. government debt has soared above $35 trillion, and coupled with low interest rates, this could lead to significant inflationary pressures. It's a ticking time bomb.
What about the fears surrounding high-yield debt?
Rick warns that the trillions invested in high-yield ETFs create a precarious structure where a lack of confidence could trigger selling pressure, leading to liquidity crises. Stay cautious out there.
Now onto resource commodities. What's happening there?
Rick emphasizes that the demand for copper is expected to soar with increasing electrification, while gold prices closely follow economic health indicators. Gold isn't just for the safe haven seekers.
What predictions does Rick have in store for us?
Rick foresees that the accumulating economic imbalances might prompt a recession. The Fed's response will be critical as they might have to react quickly to maintain stability.
And what's the outlook for commodities?
A surge in demand for electric vehicles is likely to drive copper prices higher, and Rick expects that the renewed interest in gold may attract more institutional investments. Could gold's time come again?
As we wrap up, what are the key takeaways from Rick's insights?
Rick underlines the importance of understanding the potential risks of high-yield debt and staying alert to market signals. Navigating these waters requires both caution and strategy.
And what's the forecast for government spending?
A major challenge ahead is the implication of continued government overspending, which could further exacerbate inflation and economic pressures. How will the government respond? Leave your thoughts in the comments below.
Welcome back to Thoughtful Money. Today we're celebrating as we discuss the exciting recovery in the market. Optimism is in the air.
That's right. Markets are showing signs of vitality again. And joining us today is the ever-insightful Lance Roberts, founder of Real Investment Advice. Get ready for some market analysis.
So, what's the core of today's discussion?
The essence is clear. After breaking through prior resistance points, markets may have potential upside as we near all-time highs.
Let's dive into the key points. What's driving this recovery?
A surge in corporate buybacks is injecting positivity, with recent retail sales exceeding expectations, driving optimism in consumer sectors.
What about the economic indicators?
CPI data indicates lowering inflation rates, but don't overlook the troubling rise in delinquencies across different loan types.
And what do we make of China's influence?
China's economic struggles are a growing concern, with home prices declining swiftly, possibly hindering global growth.
So what's the forecast?
Short term, expect some volatility, but if positive trends persist, all-time highs are well within reach.
Any thoughts on interest rate changes?
Yes, a 25 basis points cut from the Federal Reserve seems likely, with their cautious approach ahead.
To wrap things up, what should viewers take away?
The sentiment is optimistic, but watch for economic changes. How do you feel about the market recovery? Drop your thoughts in the comments.
And one last thought.
Personal financial planning is key. Let's not rely solely on market conditions. What strategies are you using? Share below.
Welcome to Joseph Wang's Markets Weekly, folks. Today, we get to navigate through the turbulent waters of the August 2024 market trends. What a week it's been.
Indeed. August has been a wild ride, but there's plenty of data and policy to unpack. Let's get straight to the facts.
So, what's the main thesis behind this week's review?
The focus here is on how recent market surges driven by new data reflect a changing economic landscape, particularly with inflation cooling and ambitious housing proposals from Vice President Harris.
First up is market performance. What are the highlights?
The S&P 500 is on fire, recovering from the panic earlier this month. The recent inflation reports have really lifted investor spirits.
Now let's dig into the inflation data.
Absolutely, the CPI is cooling off at just 2.9%, and PCE forecasts show a positive trend. The Fed is likely to respond with interest rate cuts.
Kicking it to housing, what's on the agenda?
Vice President Harris's proposal for a $25,000 subsidy could boost demand, but without addressing supply, we're looking at higher prices.
And what about the gold market?
Gold has soared to new heights, primarily driven by a weaker dollar. It's a classic reaction in uncertain times.
So what can we expect from the Fed?
The market is pricing in a significant cut in September, which could set the tone for the rest of the year.
And what about those housing subsidies?
While they aim to help, there's a real risk of pushing home prices even higher if supply can't keep up.
To wrap it all up, what should our viewers take away from this?
The positive data and proposals could signal a brightening economic outlook, but caution is warranted. With inflation cooling, will this be the push we need? What are your thoughts?
And do you think the housing proposals will work?
History reminds us that such measures might backfire. What do you think? Share your views.
Welcome to CiovaccoCapital, where financial insights meet market strategies. Today's discussion centers on the major differences between the years 2000 and 2024 that could propel stocks to new heights.
That's right. We're diving into key demographics, AI developments, and the shifting market leadership that could reshape our investment landscape.
So what's the overarching thesis here? What should viewers take away?
The main thesis is that key differences, like demographic shifts and positive AI prospects, could uniquely position the stock market for growth in 2024, unlike the downturn faced in 2000.
Now, what are the crucial indicators of market recovery?
The S&P 500 is holding above significant support levels, while tech stocks and growth sectors are seeing a resurgence, which is a positive sign for investors.
Let's talk about demographics. How are they influencing this potential growth?
Millennials are now wealthier than their predecessors, meaning more capital could flow the markets as they begin investing more aggressively.
And then there's AI. What role does it play?
AI advancements are reviving tech markets, indicating a strong potential for growth that we haven't seen since the turn of the millennium.
What are the predictions for the upcoming year based on this analysis?
The outlook suggests sustained uptrends, with stocks likely reaching new highs, especially in the growth and tech sectors.
Any thoughts on the Fed's influence?
Yes, there's a strong indication that the Fed might cut rates, which could further bolster market confidence.
Wrapping up, what should investors take away?
Recognizing the stark differences between 2000 and 2024 allows investors to calibrate their strategies effectively, anticipating growth while mitigating risks.
Great insights. How are you planning to position your investments with this outlook?
Drop a comment below to share your thoughts or strategies that you've devised for the upcoming year.
Welcome back to Blockworks Macro. Today's engaging topic: has the dust settled on our economic outlook? Ty, just back from a vacation, what's the scoop?
Well, it's been a roller coaster. The market is swinging wildly between signs of a recession and flashes of recovery. We've entered a soft landing phase, and it's a wild ride.
So, let's dive into the main thesis of this week's discussion. What's the key takeaway?
The key point is that investor sentiment is fluctuating unexpectedly, displaying both fears of a recession and signs of economic rebound. It's pivotal to monitor upcoming economic indicators.
Let's break down the key points. How is investor sentiment shaping up?
Investors are swinging from panic to optimism. Yesterday, strong retail sales data had everyone buzzing, but today, it's all about housing downturn fears.
And what about the role of central banks?
Central banks are easing globally, which is a bullish sign. The fixed income market isn't hinting at a credit crisis, keeping spirits up.
How about market volatility?
The VIX experienced one of the largest declines in history recently. This drastic drop reflects the extreme market conditions we're navigating.
What are the predictions looking like?
Though a recession isn't certain, significant risks remain. We could see multiple rate cuts if conditions worsen.
Finally, how's the long-term outlook?
The dynamics are shifting. With a focus on decentralization and robust corporate buybacks, the long-term trend could favor a rebound.
What can we expect regarding investor behavior?
Expect continued swings in sentiment, heavily influenced by macroeconomic events in the next few months.
And how will interest rates play into this?
We might see 25 to 50 basis point cuts soon, depending on how economic conditions unfold.
As we wrap things up, what's the big takeaway?
The lesson is to stay adaptable. Investors should remain vigilant, as current volatility offers both challenges and opportunities. What's your take on this oscillation? Let us know in the comments.
In today's review, we've walked through Jack Mallers' alarming insights regarding dollar liquidity and the dangers of asset bubbles, which stands in contrast to Rick Rule's warnings about high-yield debt risks.
While Lance Roberts exudes optimism about a market recovery, others like Game of Trade's caution against the volatility, especially in tech stocks.
Ultimately, a recurring theme emerged: the necessity for vigilance and adaptation in this fluctuating market environment. Thanks for watching Financial Insights in Minutes for August 17th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.